The topic under discussion, it's a small one, global financial markets, geopolitics, markets and capital flows, and we've got, whatever it is, 40 minutes. So we've got a lot to talk about. I've got a great panel, though, to talk about it with me. I have Jakub Michalik, who's a last-minute stand-in from Euronext. Jakub, thanks for being here. Souâd Benkredda, who just about made it through the London traffic to get here on time. She's from DZ Bank. Bea Martin, no relation, from UBS. Patrick Thomson from JP Morgan Asset Management, and Valerie Urbain from Euroclear. So this time last year, we were having a very similar discussion in Frankfurt about what an incredible moment of opportunity it was for Europe and the UK and Asia to rebalance the global financial system. We'd just come out of the Liberation Day stuff, whatever that was. And I wonder, you know, for all of you, what has changed over the past year? Is that story still in play? Is there still a global moment for Europe and the UK and Asia? I'll start with you, Jakub, because you're right next to me.
Yeah, thank you. Thank you. Good morning, everyone. Well, I think that definitely geopolitics continue to put the investment flows in the center rather than in the background that it was in the past. And clearly, as Euronext, we operate 8 exchanges across 8 European countries, so we see it firsthand across all our jurisdictions. Clearly, a year ago, there was this expectations that international investment flow would bring what was, I think it was UBS study, 1.2 trillion over 5 years. Since Iran, we saw it's been flattening, clearly. But at the same time, we do see an increase of investment within Europe. And I think it's both on the capital supply side and also on the capital demand side. So starting with the latter, we have seen a huge boom on aerospace and defense IPOs in Europe, definitely in our markets. We've seen a lot of demand for European defense bond labels, and we've seen a lot of pickup from the retail investors across Europe. And that goes a long way across different jurisdictions, developing their own savings accounts, developing their auto-enrollment in pension systems. And that also goes very much hand in hand with the regulatory approaches that are now chosen by European policymakers. So the entire savings and investment union agenda plays into strengthening European strategic autonomy through a higher participation of retail and households there. And we also see a regulatory approach which is much more competitive. It's faster, streamlining, and just an example, right? I mean, we operate one trading platform across 8 European countries, and until now we had 8 regulators deciding on any changes of the platforms, authorizing this. But we're going to get one single supervisor, right? So the same with the settlement. We have over 30 settlement systems in Europe, and barely use D2S system. We're going to now move to a fully fledged D2S use. So there is this clear notion of strengthening the flows and strengthening integration within Europe, which will be beneficial. And clearly, geopolitics will drive a global fragmentation, but at least for Europe, it will increase the regional integration, which I think is great.
Yeah, absolutely. And it takes time, but it's still worth doing. Souâd, you know, again, with that backdrop, does Iran change everything? Does it take us back to square one, or is that agenda still in play?
So also very warm welcome from my side. I think Iran has changed a lot, but not just Iran. If you look at 1 year back, we've had Venezuela, Greenland, Iran, so quite a lot of things happened. Yeah. And the recent Iran war has really exposed some fundamental weaknesses in terms of energy exposure, both in Asia as well as in Europe. So I think, yes, it does change a lot. We have learned a lot. We have also learned the interdependencies in terms of where do you transport what. So I think a lot of things have changed. Does it change the fundamental story of Europe being a great opportunity to invest in? I think not in the long term, but in the short term, yes. You can see that in the stock markets if you compare the European stock market performance versus the US one. So yes, I do believe that the exposed weaknesses have taken a toll on the Euro story, but not in the long run. However, I think we should actually take all of these events and try to learn something, which clearly Europe is doing. Maybe we'll come back to that later, and actually do something rather than just sit here and actually not change anything.
Yeah. But Bea, you're nodding along. I mean, do you get more of a sense of kind of fortress Europe that's taken hold over the past couple of years? Do we have to speak up for ourselves somewhat more?
Well, I mean, and great to be here as well. I think it's clear that Europe needs to take an action, and with the Draghi report already, I think that he laid out a lot of ideas, of which very few of them were obviously taken into action. Europe is a fragmented market and has been for a while. I think that has been, on the one side, a big barrier for many competitors to enter. On the other side, I think a very difficult market to navigate if you are an investor. If you think about, the US, the US GDP, I mean, Europe's GDP around 30 trillion, very near to what, the US GDP will be, 500 million of, inhabitants living here in Europe. Very similar numbers to the US, yet, when you think about the market cap for the US, 60% of the total market cap for the world, definitely more investable, more unified market, easier to navigate for investors. That's for sure the case. I think Europe is thinking about, the fact that they need to stay competitive, or we need to stay competitive, and how to do that. We've seen a big push in the UK, for example, for simpler regulation, and I think, all of us welcome those movements. And I think it's important that we continue to, work together as one bloc, to be one voice and be, take the place that Europe deserves.
Yeah, absolutely. And Valerie, from the point of view of Euroclear, we touched a little bit on this idea of just integration on the practical stuff. I mean, how much impetus do you see into that at the moment?
Well, I would comment on 2 points.
Yeah.
First of all, I'm traveling quite a lot, and it's amazing to see how Europe has become again back on the agenda of all the global investors. I think in the past, you had mostly people investing first in the US and then domestically, and then the third party was somewhere else. Now when you travel around, I mean, clearly there is a willingness to diversify in terms of markets, but also in terms of service providers. I think everything which is related as well to geopolitical risks, but also in terms of legal certainty, has suddenly attracted a lot more value than in the past. It's not only about the Iran war. I think it's everything what happened over the last year. Clearly, I mean, all these elements which were taken for granted now suddenly comes back on the agenda. So I think Europe definitely has a role to play, because there is this search for diversification. Now, the other aspect, to come back to your initial question about the impact of the Iran war and the different elements, what we do see is a surge in the issuances of Eurobonds. So Eurobonds, which is a market which exists for several decades, was maybe considered as a very traditional finance, bit like sleepy market, if I can call it like that. In the last year, we have seen 100% of new issuances in the Eurobonds. You have seen recently mega deals from the Alphabet and the Google and the likes. So I think that, again, diversification is playing on all sides, because those insurers are also looking for new pools of investors, new currency exposure. So I think it's amazing, because we talk a lot about fragmentation, and at the same time, we, as ICSD, we need to make sure that we provide, a global coverage with lots of interoperability to ease the flows of capital.
Yeah, and maybe we can come on to that primary market element in a little while. It was quite funny. I was talking to a DCM banker in Europe the other day, and he was talking about that Alphabet deal. What was it, 19 billion euros? Fourth biggest deal ever in Europe. And he was saying, in the US, that's just another day in the office. But over here, this is like a really, quite literally a big deal.
But it worked, and it worked well.
And it went great, and they're issuing across a whole different bunch of currencies, and it's all being absorbed very well in Europe, and that's great to see. But that's definitely an important element here. Patrick, what are your views here? Do you get the same sense as Valerie does, that people want to put money to work in Europe?
Yeah, thanks, Katie. Totally agree with Valerie. What we're seeing, our business is growing substantially in Europe. We run over $1 trillion now here of active assets, and we're very excited by that. And I think it's predicated on 3 things that is happening in Europe. One is the fiscal spend. If you look at, it's 480 billion by 2027 into defence, as an example. You look at what Germany is doing in terms of its fiscal spend. Those are very powerful levers for us as investors, global investors. Secondly, it's the reform. And we actually do see very positive signs there, reform. The Savings and Investment Union, the desire by European policymakers to unlock the 14 trillion euros sitting on household balance sheets and get that into more productive finance. And we think that's a really, really important initiative. And we're seeing the benefits of that. And you look at the German reform that's going to happen in January next year. German citizens are going to get a check through the post or a tax rebate to encourage them to put their money to work more productively. So those are real reforms. And thirdly, it's really that business of diversification, because the US has performed extremely well, but it is a very concentrated market, very narrow market. And just on the basis of diversification being one of the genuine free lunches that you get in investing, we're seeing much more appeal to move capital back into Europe as a diversifier, because there are very attractive companies and investment opportunities here.
Yeah. As part of that discussion, I wonder what you all think about where is safety now? What is the safe asset, and to what extent can Europe encroach on that turf? So one of the interesting things that came out at the start of the war in Iran is that, sure, the dollar picked up a bit, but not that much. It's pretty clear to me, at least, that some of its safe haven appeal is wobbling. Europe is making steady but slow progress towards putting something together that could step into that role. But yeah, what is the risk-free asset now? I mean, Patrick, maybe when you speak to your portfolio managers, what do they say to you about where is home, where is base?
I mean, I think the hegemony of the US Treasury is still alive and well, but I would counter that when governments spend a lot of money, we as very large fixed income managers effectively lend that money, and we look very closely at factors such as balance of trade and the ability to repay that debt. And in fact, Sarah in her keynote mentioned the LDI crisis, and I think that's a perfect example of the sort of analysis you have to do as a fixed income investor in government bonds. Is, do you understand the fiscal position of the government? Can it afford to borrow, and at what rate? And it's analysis like this that really, I think you've got to look at quite closely in the US. And there is an argument to say that over the long term, the US dollar, our central case is that will weaken over the long term because of some of the dynamics around the fiscal position of the US. We all know the numbers, and we think that creating that level of debt is not sustainable in the long run. So you're going to have to look at, diversifying that risk. And I think Europe has a great opportunity to be a safe harbour for assets. It is predicated, as Bea said, on reform. They need to reform, and they need to get their regulatory systems and capital markets working more harmoniously, and they need to have clear and sensible regulation to allow us as investors to make informed decisions on where to place our money. But again, I'm pretty optimistic on the direction of travel.
Yeah. I mean, to me, this is very similar to the discussion that's taking place in Europe currently about technological sovereignty. We don't have a European Google, and we don't have a European Visa, and we don't have a European Amazon Web Services. And there's lots of things that we just can't do without US military equipment and without US technology. It's exactly the same as the dollar's sort of centrality in global finance. It doesn't mean that it's the wrong thing to do to at least think about how to come up with additional options. Doesn't mean we're going to stop using Visa tomorrow. But if there was a Euro Visa, would I use that? Sure, I'd also use that. So, Bea, how does the European banking system fit into that desire to just think about using other options? How can we make that more appealing to the rest of the world?
We have seen, I mean, you mentioned that, but we've seen, a clear, at least reflection from regulators to think about data sovereignty, cloud sovereignty. So for us in the business we do, how are we, thinking about resilience? How are we thinking about not being dependent on, other jurisdictions? And I think if you look at some of the, surveys that are done in the markets, probably over 50% of the executives will think that, their biggest risk is third-party risk, right? So the dependency of all those, market participants that you just mentioned before. I think, Europe is a place where we have been developing really good regulation and guardrails for what's going on in those in payments, for what's going on in in cloud. And so for us, we have the opportunity, and it was mentioned before, Valerie said, we have a very strong legal framework. Yeah. And I think all of those things for safety, data protection, and all those things are definitely something that investors continue to be, very, very much looking at, right?
Yeah, exactly. And Souâd, just going slightly back to this question of what the risk-free asset is, a lot has changed in the Gulf this year. What happens to all those Gulf dollars? You've got some sort of knowledge in that space.
Yeah, so that's a very interesting one. We spoke about actually lots of things having happened last year, and one of them obviously is also about flow of capital and what does it mean. And if you look at the Gulf countries, so 40% of all sovereign wealth fund assets sit in the Gulf, so it's a very, very potent investor, which has been increasingly diversifying its money towards Europe, which is great news for us, but then obviously the Iran war came, and the PIF, so the Public Investment Fund of Saudi Arabia, has announced that it will cut back the foreign investments from 30 to 20%. That doesn't necessarily mean that it's very bad news for Europe, because it could mean that we still get a larger proportion of a smaller cake. That could still be very good for us in Europe. And I think that Europe actually has a very compelling, interesting investment case for the Gulf countries. So as Bea said, so we've got the element of actually a strong legal system that's very appealing. We've got the green energy transition, especially from fossil fuel dependent countries like the Gulf countries. That's also very compelling sort of offering in terms of learning how to diversify. So I think there is still an interesting case in terms of making maybe selected private investments. Looking at the more, we were talking about the US Treasuries, so there's a reality if we look at the broader market in terms of investing in Europe, and as much as I would love to say, yes, Europe will actually be equal to the US dollar in 2 years' time, I don't think that's going to happen in the near future, just because of the sheer depth of the US Treasury markets being, I think, 30 trillion. And if you look at Europe, the largest and largest, obviously, GDP country is Germany, and the total issuance is 1.5. So I think that's very important to bear in mind. So what are we talking about? Are we talking about super liquid markets and then Europe being at par with the US? Probably not in the next few years, but are we talking about select investments? Like I was mentioning, green energy is something where you need really legal certainty. Then definitely yes. So I think it's important to focus on what we're good at, rather than just saying, you know what actually will be the next US, because I think that's going to take some time.
Yeah, exactly. And Jakub, just to take it slightly more back to sort of, the infrastructure and the underpinnings of how this all works. It's difficult, right? Because as Valerie says, there's a real value in certainty and in legal frameworks, but at the same time, we do need change in Europe. How do you do those two things simultaneously?
Well, that's a great question. So indeed, I think the good thing is that Europe, from one side, it's good that Europe is slow in making those changes, because it gives the perception of being more certain from the legal perspective, right? We don't have executive orders in Europe. That means we're not going to make an overnight U-turn on how you define our trade or investment policies, and also we don't go. I mean, there's a lot of checks and balances on national and European levels to go with Europe first or Netherlands first or Italy first, no matter what the country is. At the same time, it is important that we also, as Europeans, set the signals to the inside world. We are part of the competitive race, because the fact that one of the goals of Brexit, or at least how it was sold to the citizens of this country, was to become more competitive, because there will be the changes, the regulatory frameworks, and also taxation will go faster. So I think it is important, and I agree with colleagues here on the panel, that the signals that we have been receiving from policymakers, regulators, have been very encouraging. At the same time, you mentioned the dependence on the US. I think it all starts with the financing. When we have the situation with the US is roughly over 20% GDP globally, but the financial markets is 71%. Of course they will have the Googles. Of course they will win the AI race. And of course, I'm more optimistic on the cloud computing, which is the next best thing, but we don't act together as Europeans and mobilize the 13, 14 trillions sitting on the bank deposits on the continental Europe, we will lose that race as well. But at least slowly but surely, I think the awareness on the highest political level, but also among the retail investors in Europe is arriving.
Yeah, yeah. So Valerie, that's the direction of travel. It's about mobilizing retail savings and it's about, you know, making Europe more comfortable in its own skin and able to compete on a global scale. Yes, maybe we've lost the AI race, but I'm sure we haven't lost the green energy race, for example, and I don't think we've lost the defense race either. So again, where does market infrastructure fit into that, and what can you really point to as examples that progress is being made here?
Well, I think in Europe we always tend to look at the glass half empty instead of looking at the glass half full. And there are good things in Europe. I think again, I mean, I mentioned earlier on the Eurobond market is the third largest fixed income market in the world after the US and after China. And guess what? I mean, the home is in Europe. So I think that's something that we should always remember. Yep. When you look at also the European markets, a lot of integration has already taken place. I mean, look at the govies, the European govies market. Given the strengths of the collateral management system in the Euroclear and Clearstream, there is a very big concentration of activity of volumes of govies onto two platforms, which are in addition fully interoperable. The ETF market, European ETF market, is also a market where, together with the private sector, it's really a private sector initiative. 10 years ago, we managed to design a settlement solution allowing multiple listing in Europe and beyond Europe, but with a single place of settlement. So I think the market is capable of innovating to find solution which works, right? Now you're right, there are still a lot of barriers, especially on the equities market in Europe, and this is where you have more fragmentation. But again, I think I have the feeling for the time being that a lot of focus is on the infrastructure. But the infrastructure has already done a lot. You know, look, when you take Euroclear, Euronext, and Clearstream, more than 95% of the volumes of Europe channel through these three groups. Yeah. So integration one way or another, or let's say consolidation has already started to happen. Now, we can have the best infrastructure and we can continue to improve it. We have an obligation to continue to look for synergies in order to be more competitive. All of that I fully agree with, and we are doing our share of efforts. But at the same time, we need to have capital markets of demand and the supply which continue to flourish. Yeah. Back to your point, if we really want to compete with the US, we need to have deeper capital markets. For that, we need to have more investors and more issuers. And for the time being, I feel that a lot of focus is on infrastructure and not enough in deepening the capital markets. And you have good example in Europe, like the Swedish example, but the Netherlands, the Dutch example with the pension funds. Yeah. But all that, I mean, require time, profound reform of the market structure, because, you know, I always use the analogy of a swimming pool. You can have the best swimming pool, i.e. the infrastructure. If there is no water to come into the swimming pool, it remains an ugly swimming pool. Yes. So I really urge us to really work also on the demand and the supply of the capital markets.
Difficult to jump into an empty swimming pool. It's a good analogy. But, you know, I think we all know the bedrock of answering that question is combined euro issuance. It is joint borrowing at scale in the Eurozone. If anyone in this room is involved in that project, please get a move on. You know, I know that this is a topic of conversation at a central bank level, at a policy level, and every fixed income manager, fund manager who I speak to says, absolutely, you issue this stuff, I will buy it. It strikes me that the infrastructure is ready to facilitate this as soon as they're ready to...
Everything is there.
Everything is ready. Please get on with it. Jakub brought up the B word, Brexit. So, you know, 10 years on from that interesting event, I think we should just talk about where this, given that this event is in London this year, let's talk about where this leaves London as a part of the global financial system. You know, Patrick, a lot has changed over the past 10 years. it's left a bruise on the UK. But what has it done in terms of our standing in global finance?
Well, I think that the fact that so many of you have come today to London is a little bit of an indication that, for financial services, and we've just committed to investing in a very large new building in London as a physical manifestation of our confidence in the UK. And it's very reassuring to hear from a policymaker earlier about the notion of taking risks. She mentioned the words hedge funds. She's supportive. I think this, by the way, reinforces a really important point back to Europe, and it's the one plea that we would have to European policymakers writ large. And I think the UK has gone on this journey, is, we're investors, and we're investors in enterprises, in companies, and those companies take risk. You can't eliminate risk. And I think one of the lessons over the last 10 years has been the desire of politicians particularly to try to eliminate risk, particularly for retail savers, for consumers. And I think it's a really, really important point. And I applaud what the Bank of England has done and the FCA here in this country, where legislators made competitiveness a parliamentary mandated objective for the regulator. The regulators cannot eliminate risk, because if you eliminate risk, you eliminate opportunity, you eliminate things that we can invest in. And I think that the UK has gone on this journey whereby they understand very clearly that there needs to be a balance, and you need to have protections, but you need to encourage people, because the single biggest opportunity is to, as we said, unlock these deposits and get them invested into that really will lead to more issuance. It leads to more demand. It's a flywheel. If you remember in the UK, when they did the privatizations 20 years ago, citizens knew what an equity was. Yeah. Today, 90% of citizens in the UK get zero financial advice. And that's terrible, because they're invested in deposits and they genuinely believe their deposits are going to provide some form of retirement. So it's really, really important that we unlock that. I haven't addressed your Brexit question quite deliberately.
Yeah, nicely
but we're very confident on the future of London.
Yeah, I mean, on your point about I guess it's about financial literacy. There was a report out from the Pensions Commission in the UK last week. Among self-employed people, 4% of them are saving into any form of pension. Right. 4%. I don't understand what these people think they're going to live on when they retire. It's terrifying. And there just is not enough of a conversation about, I think very often people think that there's the city and there's finance and then there's real life, and these are two completely separate things. And I don't quite know how that has built up over the past few decades, but it's really time to break that down and make people understand that everyone has a stake in this working properly. Otherwise, we can't fund the defence, we can't fund the green energy transition, and you can't fund your pension. So, I don't know, this is like one of my hobby horses at the moment, but it's a really important conversation to have, I think. Another really important conversation, and this is a bit of a tangent, but it does plug into the geopolitical question, is cyber risks. Every financial institution on the planet is subject to thousands of attempts every day at some form of hacking. This is something that we've just sort of learnt to live with and learnt to guard against. But as AI gets more sophisticated, you do have these concerns about the Mythos model, for example. It's reasonable to be concerned about malign foreign actors in this sort of geopolitical environment. How are you all thinking about how to defend against that sort of risk? I mean, the nightmare scenario is that something goes wrong one day, and it probably will go wrong one day. But Jakub, how do you think about that?
No, absolutely. So we are very much a technology company. I mean, 1/3 of Euronext colleagues are IT engineers. So for us, technological disruption is also both a challenge and an opportunity. So we've been very fairly on investing in AI as a way of facilitating what our client needs and adapting to those changes. We have invested heavily also on AI as a way of programming and software and how to get better, faster, and more disruptive, given the competitive landscape. Clearly, AI will bring, and already now brings, risks, and clearly there needs to be checks and balances. EU has own regulatory framework for that, which is somehow safeguarding. It's relatively high level, but it is the onus on the companies to ensure that those risks are managed. clearly we, going forward, will have to improve the way how we check what actually comes out of the AI. We manage the AI agents the similar way as we manage our junior colleagues going forward. It is important because if they don't go home at 5, 6 o'clock, AI agents work 24/7, and you need to make sure that whatever they produce, it does not feed into other kind of unintended consequences. Clearly, underlying data is very important, and it does bring also the risk related to property rights and so on. But without data, there is no AI. So I think the underlying data and how it's governed and how it's managed will be extremely important. And the last point is the energy sustainability, right? I mean, the AI programs use 33 times more than the traditional software in terms of the energy consumption. And giving Iran and dependence of energy sources, we also need to see how we go around forward. But clearly, we are on top of game, and this is really about our reputational survival in the business.
Yeah. Souâd, do cyber risks keep you awake at night?
Yeah, absolutely. I think they do keep awake everybody who's in the regulated industry. But coming back maybe to Mythos, so whilst obviously I agree we have to be ultra vigilant, it's also important to bear in mind where this came from. So it was actually an opportunity thinking first, like try to identify gaps in your security and address them. So AI to me has really its two sides of the story. So one is the opportunity that you mentioned earlier, and I think there's a tremendous opportunity, but that obviously comes with risk. And Mythos is the best example, and that's obviously trying to be handled right now. But I think that is very important. It's always, most of the time, very good things have a more ugly side of the story, and it's about managing it. And in terms of the energy consumption, whilst obviously I agree with you and data centers are being built even in space, one thing to bear in mind, we had the DeepSeek moment. So what I personally think is we should always stay very agile, vigilant, because our assumptions could change very rapidly because of technological advancement. And that's maybe a big difference between how we're thinking now and 10 years ago. So you have to be ultra flexible, and your assumptions might not hold true even in the next month.
And Bea, how are you thinking about it? You know, we were talking about this at the FT the other day, and it strikes me that there possibly should be more of a kind of governmental role in figuring out how these AI models work and what the vulnerabilities are. You know, again, does this worry you?
Yeah, I mean, obviously, being the group COO and having technology and cyber risk under me, definitely one space where I spent a lot of time. Since the Mythos news, of course, we've been thinking about, you know, the vulnerabilities in the environment. I think all players understand vulnerabilities in software are not more than defects in software. It doesn't actually mean that, you know, your attack surface is somehow open to externals. I do think, and I agree with Souâd on that, I think we have two sides of the same, you know, kind of coin here, because with this software or AI that is going to allow us to repair software before you kind of put it out there. I think over the last years, there's been a race between time to market and perfection to you know, kind of patch all the software so that you have no defects in the software you produce. And perhaps this is an opportunity to produce better software first time around, and you know, not have that conflict between time to market and quality of software. We have been doing a lot of work. Obviously, this is one of the biggest focuses from the board, and I'm sure across the board that is true because of the reputational issues that this could, you know, bring. I think, you know, for us, we've seen the zero-day vulnerability or the zero-day attacks, time to, you know, exploit zero-day vulnerabilities reducing over the last years. And before Mythos, this was something that we had spent a lot of time on. We have already, you know, some AI solutions to, you know, map our state and look at, you know, vulnerabilities, connect them and patch them. So, and so we will continue using AI to also defend. I think there is a lot of, I mean, you mentioned it, we get a lot of threats every day. and we defend against those. We have automated through AI and also, very normal automation or traditional automation. A lot of the work that we do there on triaging and so on. And with respect to regulators, I mean, we see a huge, kind of involvement from regulators. Bank of England has been, holding a lot of meetings with all of us to talk about this, to give some guidance. I would expect that, we will see, some guidance on with regards to models and with regards to, AI very soon. The FCA has a sandbox that we are part of. So in the US, we are very close to, the work that is going on there, and across the board in Europe, the ECB as well. I think all regulators are thinking about, how to regulate in this space, and hopefully we can come to a principles-based, because, I mean, you said it, this is like having juniors. We don't prescribe, exactly what people do every day. We are in a regulated environment, but, still, I think building some of these agents that mirror your, access, your capabilities, and those who are particularly used for personal productivity, which we see a lot today. I mean, all these tools that are just for personal productivity, I think the real question is, are they risk models that need to go through board governance, or, are those tools that you're going to use, like Excel or any of the other tools that we got years ago that have deterministic outcomes to a certain extent, and then, are they going to be just tools that you use for everyday's work, right?
Yeah, exactly. And maybe, I don't know, maybe some of those things are Trojan horses, but you've got to be alive to the risks and to the opportunities. Valerie, how are you thinking about it? Do you think geopolitics makes that, intensifies that cyber risk?
Definitely. I think that clearly, at least at Euroclear, we are based on trust. I mean, our business is about trust and about providing safety to the market. So business resilience has been always a very, very high element of focus of our board. It's a big part of our investment portfolio, continuing to try to be ahead, or at least try to catch up, as much as we can. And yes, geopolitics are changing the scene. And in terms of our data centers, we are really stepping up quite substantially the standards that we were using in the past. So yes, that remains a major area of investment for Euroclear, rightly so, given the role that we have in the market. And I agree with all what Bea was saying, Souâd as well, is that AI needs to be used, and there are different sides, but we have to use it in a responsible way. But we cannot just ignore that, on the contrary, because it brings also positive things. It will help accelerate a number of change, but it has to be dealt with in a very responsible way, with the eyes wide open, and with understanding the new risks that it entails.
Yeah, Patrick, there's hackers, there's malign actors. Do you feel as ready as you can be?
Yeah, I mean, as a company, we spend about $20 billion a year on technology. A significant percentage of that is dedicated towards cyber, you would expect, given the size and scale of the company. I reflect from a European perspective. Before I joined JP Morgan 30 years ago, I was a soldier, so I spent 5 years in the British Army. If you look at the rate of change that is happening on the battlefield in Ukraine, it is absolutely remarkable. Ukraine, I think I'm right in saying, delivered 7 million drones to its battlefield forces last year. And the nature of warfare is changing. It's really about data and cyber. I think I'm right in saying that every NHS trust in the UK has been attacked over the last 12, 24 months. So taking these state actors very, very seriously about the economic disruption that they can engender in your countries is absolutely critical. It is another form of warfare. And so as companies that we invest in, we expect to see cyber at the top of the agenda. We expect to see significant resources and a plan dedicated to those, because the vulnerabilities are very significant. And so we don't expect that to change. We expect that, in fact, to increase in the advent of some of the new tools being developed in AI.
Yeah, we can all learn a lot from the Ukrainian army. Slava Ukraini. Very quickly, we've got 30 seconds left. I want to ask each of you in turn if you've got one wish from the people in this room, from policymakers, from regulators, for what we can achieve in the next year. Patrick, you first.
So policy stability and predictability. I go back to the LDI crisis and what happened there, and that was a disaster for the UK. So stability and predictability.
Yeah, absolutely. Good shout. Valerie?
Partnership between public and private sector.
Good one. Okay, thank you. Bea?
An effort for Europe to come closer together as a bloc and have a voice, together with the UK, by the way.
Yeah, we're still friends. yeah, Souâd.
So Bea stole my point on the UK and the defense especially, specifically. So I would maybe say, even if we do not reach an agreement with the 27 member states, let's have a coalition of the willing and work on something and make it powerful.
Yeah, absolutely. Yeah, Jakub?
Speed and scale in building savings and investment union and making a regulatory framework fit for the 21st century.
Yeah, emphasis on speed. We, speaking of which, we are out of time. Please thank me join me in thanking the panelists here today.